What's good? What's good? It's your man Don Bucks. Welcome to another episode of Cheef and Charts, brought to you by Rapping Dough. You know, the home of money conversations. Ha, that boy good. That boy good. This is episode Wild Cherry, and that boy good. Hey, what could I say? If y'all just tapping in, y'all probably like, what is this dude talking about? I told y'all what was gonna happen to the spy today, right? The spy. We're gonna get into it. But like I said, this is your first time tapping in. Make sure y'all hit the like and subscribe button, also the notification bell. This is where we give one of the solutions to the wealth gap. That's options trading. So of course we cheap in the finest. This actually tastes pretty good. I can't wait. Hey, I just picked up like 6 new flavors, y'all. I'm excited for these new episodes. You know, I try to switch up, my flavors, different episodes, but sometimes some batches stay around longer than others. You feel me? But I like them sativas. And you know what? I might as well break this one down because I know y'all don't just tap in here just for the charts. You feel me? So wild cherry is a sativa. Y'all know how I like sativas because some weeds can put you to sleep. Me, I need to be active. You feel me? And there's been a taboo about weed. All weed don't put you to sleep. So sativas are the active, productive weeds. You feel me? So this one is Thunderfuck crossed with train wreck. So this gives you creative energy, relaxing body high. I like it. I like it. I like it. So that's wild cherry. But down goes Fraaaazier, y'all. Let's look at this chart. So we know that this spy been on a downtrend, right? And if y'all been tapped in, y'all been making money. That's the caveat if you've been tapped in. But if this is your first time tapping in, welcome. So I'm giving you all the sauce of what I see in the chart and how I make my play based off of it. So yesterday, if you was tapped in, I told y'all we was bouncing around in this range of 260 and 270. From down here to up here, we've been in this range. So yesterday is this red bar. Let's make this screen bigger. Yesterday is this red bar. All right, so it bounced off, it rejected at this resistance and came back down. So when it's in a range, it typically does that until it's in balance. So whole time I see this low, the MACD, the momentum indicator is going down. So the momentum is to the downside, right? But when you see strength in there, only reason there was strength in there is because there was a selling climax and the bars came outside of the Bollinger Bands. The Bollinger Bands are these blue confines here. So when they outside of the bottom, it's a selling climax. So natural price action is for it to go up. So that's all this retracement is. On top of that, it's bouncing off of a level. So this bounce means nothing in the context of what we're seeing here. We see a downwards momentum with strength. Okay, that strength is going to be short-lived because there's a resistance there and we have downwards momentum. Then yesterday, it touched 360, like I said the day before it was going to do, right? But it came back up before close and it closed at 362. So what I said was going to happen today was that when it bounces off of here, it's not going to have too much strength. Why? Because the momentum is to the downside. I was looking for this to break because the momentum is to the downside. How long could this hold? with downwards momentum going on, right? So what I said was going to happen today was that it was going to go up to about 366-ish before it rejects. Look at this up here. What did it say it went to? What the high say next to the H? 365.91. You might as well say 366, right? Because that's what the chart said. The chart said it was going to go there. Some of it said it was going to go there. The rest of it was kind of like intuition. But that's what I seen. You feel me? And lo and behold, it got there and rejected. I didn't know it was going to break support though. Today, I knew it was going to break it soon. I just didn't know when. So knowing that we had that weakness going on, the stock that I'm playing acts like this in reverse. So while the SPY is breaking supports, mine is going up, breaking resistances. So I'm positioned for calls on mine, knowing that this one is going down. And I'm going to show you that. Because I told y'all yesterday I had messed up selling those contracts. I would have made so much money off that play if I wouldn't have sold all those contracts, because I would have still been holding on to one of them. Today, I probably would have sold it and repositioned. But what I did was I was in it. Like I told y'all yesterday, I was in it. And lo and behold, it started going up because I was down at the end of the day about, I don't know, 10%. Because I hopped in a little bit too early. But you're not going to get exact entry. You're going to get as close as you can, right? So it was as good as I could get. So it was down at the end of the day, though. Where did I get in? So I got in like right here, right? And then it went down some more at the end of the day. So I was like, whatever. So this morning, it went down some more because the SPY was going up to 366. So what SPY was going up, mine was going down. But I wasn't worried because it was a support here. On top of the fact that there's weakness in the SPY and there's strength in mine. So I was like, the parameters are still the same. So I stayed in it. And when it came up to a little bit past where I got in at, I sold it for a slight profit. I sold that contract because the expiration date didn't coincide with the weekend coming up. You got Saturday, Sunday. I didn't have that many days to count those in. So I said, you know what, let me take this little profit and reposition. There's always going to be another setup. I say this over. I said this in the boot camp. I say this, there's always going to be another setup. Don't ever be afraid to take profit. So I took profit when it got to about right here, right? When it got to right here, then it retraced. So I took profit when it got to right here, but then when it retraced, I got back in. I got back in because I seen the SPY doing what it was doing. I said, oh man, this about to break. It's about to break. And the next level down is 355. So we got $2 more next week to go. So I'm back in it and I'm up. So let's look at it. Let's look at it. I'm telling you about it. Let's look at it. Webull. If you want to, because I like Webull. If you don't have a brokerage account and you want to get some free stocks, I have a referral link in the description, so you can use that. You'll get some free stocks. I'll get some free stocks. But you can paper trade. You see this? You can use fake money in practice, and they give you $1 million options trading. So I recommend this to practice. But as you can see, I bought this contract for 170 at the end of the day, and that retracement, because that gives you a momentum divergence, because you have strength, and then that red bar is the weakness. The momentum MACD is going to have a new high. So that red bar with that new high in the MACD says buy that. So that's what I was waiting for. So on that retracement, I bought calls for the next level. The next level is 30. So that's why I picked a $30 strike price, 15 days out. So I got a whole nother contract on the retracement. You feel me? And I bought it for 170, and it's already up 13% already at the end of the day. And it ain't even reached $30, the $30 strike price yet. This is doing what I'm teaching y'all to do every day. Y'all remember, I started this account with $100, but for argument's sake, with the free stocks they gave me, you could say it was about 210. So it's over double using the same stuff that I'm teaching. So we're going to continue to run this up. I'm going to say we, because this is our account now. So I'm making these trades on your behalf. Okay. So I'm going to eventually create like a what they call a Patreon, so you guys can donate to my future, what they call those, I'm actually out with y'all, what they call it, nonprofit, to the future nonprofit. So this is going to be the building fund. I plan on opening up incubation centers nationwide, teaching people, mainly the underserved, business skills, podcasting skills, trading skills, of course, investing, things of that nature. So I'm going to create that, and I'm going to give you all opportunity to profit for the nonprofit. So this is what the account's looking like, and this is the play that I'm in that I just described. So let's go back to the chart. So like I said, here's the strength. Here's the new high in the MACD, the blue line here, new high. And there's the weakness that I was looking for. I was looking for that retracement, because I already got in here and, ran it up here. So I took profit at this level and waited for it, because this is a level actually. 19 is a level, 29 is an actual level. So I knew that. You see it right here. Look, it stopped. It came up and stopped right here. Came up and stopped right here. Came up and stopped. So 29 is a level. So that's why I took profit there, right? Because I know somebody was like, "Why you take profit there?" I took profit there because for two reasons. I seen this level approaching, and secondly, I knew I wasn't. And this is where you gotta put your ego to the side. I know we all looking for big profits each trade, but because of the weekend coming up, you have to use common sense. I didn't have the amount of days left that I really wanted on it, and the strike price wasn't as optimal as I wanted it to be, because I had a $30 strike price, but the expiration date was too short for my liking, being that the weekend was coming up. So I said, you know what? I'm going to take this little bit of profit and wait for my next setup, because the parameters are still intact. Remember, we got new high in the MACD. Oh, that's the relatable time frame. Let's look at the trading time frame. Okay, so let's go to the daily. See what the daily say. Okay, so the daily, we got new highs in the daily. So I like this. This is what we're setting up for anyway. We're positioning for the longer term targets. So I seen that right here was a level on the daily. So in my trading time frame, I'm going to position for that. And that's 29. That's right here. That's why I took profit there. Right. So I took profit there and waited to see what it was going to do with that level. It broke the level. So this is why people have issues with trading breakouts. The parameters had to be in place for that breakout to be successful. So I see all the parameters intact. I took profit on the first target. Now, if I would have had more than one contract, that would have been dope. With a longer expiration, that would have been dope, because I would have sold one here and let the other one ride to the 30, which I planned on doing a couple days before, but I sold all of them at the same time by mistake, not being awoke. That's why I named it Wake Up and Trade. That episode, you can go back and watch that. But yeah, get your rest at night. So that would have been a dope trade if I had more than one contract, but I didn't. So I sold it here for a couple of dollars, literally, and waited for a pullback. Caught the pullback, positioned for the next level up. So it broke the level, and the natural reaction, price action, is a pullback. So you want it to bounce off that level it just broke, not go through it and then fall back down through it. So it broke it, and it retraced down, but it stopped right on top of it. So you see that? Where are we? So it went up, and I waited for the retracement. So I said, all right, I gotta wait and see how far it's going to go down. And I see the level here, so I'm expecting it to stop here. So if you have your levels drawn, you can already have things predetermined in your brain. So if it work out, cool. If it don't, you're like, okay, it's going to the next level. You know what I'm saying? So you have something to gauge what you're seeing. You got to draw your levels, right? You draw your daily ones, because that's what we're positioning for, right? Then you go down to your trading time frame, whatever one you picked. I like the 2 hour. That's why I keep going to the 2 hour. This is my trading time frame, meaning this is where I can see what's going on in that daily bar. Now I can see the integrity of that one bar. It's represented with 4 bars in my 2 hour. So I'm like, okay. If on the daily I see, let's see if I can give you a good example. So these are daily levels. All right, so I know that, let's see, where are we? Let's say we are right here, right? Let's say this John gaps, it opens, it gaps up right here, right? It breaks this level, as you can see. It breaks it, but then the next day it retraces and stops. It comes down. That's like, you see that red bar, oh man. But you look down and you see it's creating a new high in the MACD, like that. The MACD is higher here than it was here, right? So that's a new high with a red bar. I would be buying calls here for the next level up. What's the next level up? 2378. So I will be picking let me see. I will be picking maybe a $28 strike price. I mean, what is it? Is it 2350 strike price? But here you see this red bar and this high in the MACD. That's called a momentum divergence. You go down to your trading time frame to see how much weakness, when is it going to stop, so you can get your precise entry. That's why you need a trading time frame, because you're like, when is this going to stop? But because you can't see it all, this is one whole day of trading. You can't see when it's going to stop precisely. So you got to drop down into a trading time frame. September 14th is back here, to see when it's going to stop. So you might not be able to see it in there either, right? You got a new high in the MACD with weakness. You can't see exactly when it's going to stop. So that's when you use your relatable time frame, right? To get surgical. So now you can see the weakness, right? But in your relatable, you can see what's going on in your 2-hour situation. Now I can see how, like, when is it exactly going to stop? So the 14th is here. Right? Boom. Yeah. So this is a lot of bars. You see this? This is a whole trading day. So from here all the way down here, all these bars represent one whole day. You couldn't see all that in that one daily bar. It was just one bar. But it was all of that going on in there. And these are plays that other people are making. So some people are making plays on the daily. Some people are making plays on the 4-hour. So it's all types of traders going on, trading and traders going on. So this is how you can get precise with your 2-hour, because you're looking for weakness, but you're like, how much weakness? So now you can dig into the 2-hour and be like, okay, now that 2-hour is ready to stop going down. And then you can make your precise entry. Like right here, you can be like, all right, boom. Went up, came down. All right, I think it might be done now. All right, you might get your calls here because you see, or here because it done turn, or here. All right, it's like, okay. But this is you're going to be able to gauge when. Each stock is different. This is why I tell you to get your one stock, and there's plenty to learn about your one stock, as you can see. So you will be able to see and feel when it's time. Like, all right, it's enough weakness. And plus it's bouncing off of this level. You're gonna start putting all these pieces together, and it's just gonna be like second nature. So yeah, it'll probably have been, let me see. What's that? Now, let's see. Yeah, it probably would have been right here. Oh no, that's 15. My bad, y'all. Yep, probably would have been right here. One of these two. One of these two would have been the signal, like, okay, that's enough weakness. It's done. Because look what happened. It just kept going up. So that's how you use your trading time frame. Daily trading, relatable. Daily trading, relatable. You need all three. So that's what I'm playing, y'all. Hopefully y'all had a dope week following Cheef and Chart, man. I'm giving y'all the sauce. I'm giving y'all the sauce. But if you wanted a little bit more structured, feel free to grab the course that everything I'm doing is in the course. It's on sale, weekend sale. I think it's $50. Grab yours. Go half with somebody. I don't care what you got to do. Get this skill set under your belt. It's your man, Don Bucks. It's Cheef and Chart. Remember, it's no competition. It's you versus you. See y'all Monday. Actually, you know what? See y'all Sunday. What the chart say Sunday. So, yeah, see y'all then.